Welcome to Manifested Publishers. My name is Mr. Dongo, Public Finance and Taxation Lecturer. Today we are going to discuss, or we're going to solve August 2024, that is question 3. We start with A. We'll read the question. Outline 5 items that should be specified in writing to a taxpayer when the commissioner has made a default assessment. When the commissioner has made a default assessment. So we note that down. Question 3A. We say that outline 5 items that should be specified, outline specified in writing, that should be specified in writing to a taxpayer, when the commissioner has made a default, what do you call it, default assessment. When the commissioner has made a default assessment. When the commissioner has made what you call a default assessment. So default assessment happens whenever a taxpayer fails to file the taxes or to declare the taxable income. It's also called what you call an estimated assessment. Also what you call an assessment, estimated assessment. Some of the things, some of the items that are basically specified in writing to the taxpayer by the commissioner when he does what you call a default assessment is the manner of objecting the assessment. If the taxpayer is basically not happy with what has been done, he will specify the manner, what you call the manner of objecting the assessment. The manner of objecting the assessment, that is number 1. So we have the due, what you call the due dates, the due date for the payment of tax, the due date for the payment of tax, comma, penalty, and interest, being a date that is not less, we say not less than 30 days, not less than 30 days from the date, we say from the date of servicing, what we call servicing the notice. The date of servicing the notice. From the date of basically servicing the notice. Then we can also have the reporting, what we call the reporting period. The reporting period to which the assessment, what we call the assessment, the reporting period to which the assessment relates. The reporting period to which the assessment basically relates. Then we have what we call the amount, the amount payable, we say the amount payable, we say the amount of any, we call it on any late, the amount of any later payment, the amount of any late payment of interest, late payment of interest, payable in respect to the tax, what you call to the tax assessed in respect to basically the tax that is assessed. Then you can also have, that is 4, the 5, the amount, what you call the amount assessed, the amount assessed as tax, the amount assessed as tax, or the amount, what you call the amount, or the amount of a deficit, or excess, or amount of a deficit or excess of input tax, carried, we said carried forward as the case may be. So a number of things that the commissioner will basically specify in writing: the manner of objecting the assessment. We have the due dates for payment of tax, penalty and interest, being a date that is not less than 30 days from the date of servicing or giving of that notice. We have the reporting period to which the assessment relate. Maybe it relates to 2022 or maybe relating to 2021. Then we talk about the amount of late payment interest payable in respect to the tax assessed. Then we say the amount assessed as a tax, or the amount of deficit or excess of input, we call it excess of input tax. So we have input tax carried forward as the case may be. These are a number of things that the commissioner will basically specify as the issues a default assessment. And that is how we particularly handle that question. That is question 3, Roman A.